Hey guys, Aaron here with Carnivore Trades. So I want to do a little video today on inside bar patterns. So I did a video on this a few months ago about how to use them to spot a bear trap based off of a failed inside bar. And I asked if you guys wanted to see more of this stuff. You guys said yes. So I'm going to do a little bit of video on this. I cover this extensively in my course, which is on my website. This is one of my favorite patterns to use. And I'm going to show you right now a few positions that I'm actually in already. So you can kind of see essentially how it works when it's put in action and how it's an actionable setup. The first example here, and what I'm going to talk about first really is what actually defines it. So some people will say an inside bar is like one thing, but I have my set of rules, and that's just kind of how I do things, and I'll show you exactly what that is here. But I'm using Upwork here. This is a stock that I own, full disclosure. I am in the money on it. But you're going to see here, there's actually two. So one, you have this big mother bar here. And what makes an inside bar? Well, first of all, and this is a weekly chart, but first of all, what makes a inside bar is you have to have a mother bar, right? What is a mother bar? Wide range candle, specifically the body, right? We don't want a wick, like we don't want this and then that to be the body, right? We want the body to be big. It doesn't mean you can't have a little bit of a wick on either side, but you want it to be a wide range candle and a wide body as well. And you can see all these other candles here, a little kind of like, they look like ants compared to this candle, right? Additionally, what else validates it? Volume, right? Big time volume. That indicates institutional sponsorship, institutional participation. And you're going to see even on the same thing here, little candles. And there's your secondary inside bar, right? With volume, right? Wide range, little bit of a wick, but big body, right? So that meets the criteria for that mother bar. Now, what makes it an inside pattern? It's really simple. Price stays inside of it on a closing basis. Some people will say like, oh no, it's got to be inside of it completely. I don't really care about that. As long as it's on a closing basis, it's fine. It's still a good pattern to me. And in fact, I actually like it when you do get outside of it and then go back in, specifically on the downside. And let me show you an example right here. You're going to see, here's your low at 968. We actually spiked that here on the week of October 30th. And we spiked it by a few pennies, and then we closed back above. Excuse me. We closed back above. Why do I like this? Because you just trapped shorts, right? So you tried to break it down, the shorts jump in, you close back above, then what happens the week after? It rips higher. So this would be what we call a test candle, a little bit of a tail behind it, testing the low, spiking the low, and then closing back up. You're trapping shorts. I love that type of pattern. So as long as price remains inside of it on a closing basis, it's good to me. Why is it good? Well, essentially, it's just a continuation pattern, right? So you have an up move, and then you're just consolidating to what? Go higher. Usually when you make a move, stocks go up, they consolidate, and then they go up. Same thing in a downtrend, they go down, they consolidate, and they keep going down. It's just a very high percentage continuation pattern. And again, being inside of this area represents you're inside of a range where institutions began to sponsor the stock. So that is, again, the psychology behind it. What are some things that could make this higher percentage? Certainly the trend being up here. Notice how the spacing starting to increase on the weekly. Previously, you had a nice pattern, nice upright pattern, but it couldn't get anything going. Why? The trend was still down there. 50 was still above the 20. Now it's starting to reverse, right? 20 above the 50, spacing starting to increase. And it's firmed up here. So you've got two inside bars right here. So this is a stock that I'm in right now. Another one that I'm in right now, and we'll go back to this, but another one that I'm in right now is Redfin. And we're in the money about 12% on this. We got in around 960 and change. And this has had a nice pop. Again, you're going to see big up move. Does that meet the criteria? Right? Volume, wide range, a little bit of a wick, but still wide range body inside, and then continuation higher. What else do we notice about this? What did we do right around here, right? We reversed the trend. 20 back above the 50, 20 back above the 100, price above the 200 and all four major moving averages, 20 moving average catching up to price as it consolidates. So these are the types of things that I tend to look for when I'm looking at an inside bar. What's one thing that would reverse that or make the probabilities lower? You could probably guess it. But if we go over to the spiders here, you can see last year, again, pretty good looking inside bar. That's a pretty tight pattern. Up move, consolidating. What's the problem with it? Below the 50, below the 100, below the 200, it's going to have a higher rate of failure. And you're going to see here, we spiked that low and we didn't really look back. And then, about 40 handles later, we found a bottom. So when these patterns fail, again, kind of going back to the previous video I did, it's a bull trap, right? So something to watch for there. But again, trend is down, makes the pattern less likely to play out. How does the pattern fail? Very simple. Doesn't matter which one. We could use any of these. You get a close below this. In this case, it'd be 895. The pattern's failed. That's it. That's all you have to do. That's all you got to look at. You don't need to do anything else. If you're looking at a weekly time frame, then guess what? The pattern fails on a weekly close. So 11.08 would be this one, and then the bigger one, the mother bar, would be 968. So if you have to use your stop out, your close, based on the time frame that you're looking at it at. So it's very simple, and that's one of the many reasons why I really like inside bar patterns, is because you know exactly where your stop is, right? Whereas opposed to any other trade, you're like, well, I might have my stop 5% or maybe it's 10%. No, there's no guesswork. You know exactly where you're wrong. And usually if you are wrong on one of these, it's going to result in a pretty nasty move to the other way. Because why would that be? Well, institutions are sponsoring it here. And if they're going to let it close below that, especially on a weekly, they're bailing on the stock, right? So that's kind of your signal there. But I really like that for the simple fact that I don't need to, do any crazy calculations or anything like that to know where I'm going to be wrong. And it makes risk management very, very simple. Last part about this is calculations here. I'm going to flip over to, let's go to a different one here. I'm going to look at AMD, and we're actually looking at a monthly chart. So you're going to see right here, this works on all time frames. Big power bar, right? Smaller candles, big power candle, little uptick in volume. Is price inside of it? Yep. Is price above all the moving averages? Yep. Do you have really good spacing between the moving averages? Yep. Nice pullback and a big pop. So this works on all time frames. And the way to calculate this is, just how you calculate your target. 81 to a high of 130. We'll just say 50 points. There's your low at 93. So we look to 143. It's actually exceeded target a little bit. So we'll look for about 143. And, that got there actually a day or two ago, and we're still running. Again, we're in the midst of a little Santa rally. If you guys are watching this back at any point in the future, you can look at the spiders here. We're just melting up. So things can exceed targets, obviously, in this environment, but that's how you calculate the target, the high to the low, and then you just take a simple measured move there. One other little thing I'll look at is if we look at RDFN again. So if we calculate this, again, 9 to 1043, again, we'll just say $1.50. Usually I kind of like to go from the last pivot before the breakout. So again, you saw that AMD chart. So we'll just say here 945 plus $1.50 is 11. Did we get to 11 today? Yes. Did we pull back? Yep. Does that mean it's done? Not necessarily. You could still, this inside bar isn't the be all end all. You could still say this pivot from here to here, is 744 to 1043. So again, 3-point move. You could just say, okay, 9 plus 3, maybe we go up to 12. Maybe we go a little bit higher, right? It's not necessarily the be all end all, but it is the way that I like to calculate that target out. So hopefully that helps everybody else out. Again, I go over this pretty extensively in my course, but this is pretty much everything you need to know for the most part. Again, remember, I don't care if price spikes through the low. In fact, it's actually a good thing as long as you close back above it and you stay inside of that, and you're above those moving averages. It's usually a good sign. It's a very good pattern to learn. And again, especially because you definitely know where you're wrong and there's no guesswork as to whether or not you need to stop out on one of these patterns. Anyways, guys, for more analysis like this, come find me on carnivoretrades.com. Subscribe to the channel. You guys take care.